Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. To start things off, Fidelity Digital Asset Services has obtained a trust company charter from the New York Department of Financial Services, or the NYDFS, allowing the Fidelity Investments Unit to custody Bitcoin for institutional investors in the financial capital of the United States. The Fidelity Digital Asset Services joins 22 other companies who are not listed that have been approved for a charter or license by the regulator to engage in virtual currency business activities. They said, and I do quote, "The custody and trade execution services that we provide are essential building blocks for institutional investors. Continued adoption of digital assets." Michael O'Reilly, Chief Operating Officer for Fidelity Digital Assets said in a press release, "The designation as a New York trust company under the supervision and examination of the DFS builds on the credibility and trust we're establishing amongst institutions." So it finally appears, we had news around, it had to be around March, April, May, somewhere around that time frame, where the people from Fidelity had finally received the green light to be able to launch as an actual cryptocurrency custodian. I guess apparently they weren't allowed to do so before. I don't know, it's just a really weird topic. Because we keep getting news that something has launched, but apparently it doesn't completely launch because it hasn't been allowed to launch in all 50 states within the US. But the point being, this is apparently very big news. This was spoken about all over the place because apparently this charter allows them to not only do business within New York, but to finally have the full go-ahead to be able to custody cryptocurrencies on a wider scale than where they were before. I sometimes wonder not how significant news like this is. It's more like it doesn't usually seem to affect the market when it actually has a very big effect in the actual movement of cryptocurrencies and the people who actually trust Fidelity. Fidelity is a major company. They're not like a little thing that just started about 3, 4, 5 years ago. They've been around for an enormous amount of time. I guess we will see eventually. I think maybe these things simply take time. We will eventually get the numbers of exactly how much crypto Fidelity is custodying, and I think that'll give us a better price metric of exactly what's going on. Anyway, that's the Fidelity news, and let us move on. Next up, there we go. Galaxy Digital, a full-service crypto merchant bank based in New York, is introducing 2 new Bitcoin funds, the Galaxy Bitcoin Fund and the Galaxy Institutional Bitcoin Fund. The new funds are garnering support from the industry's biggest players, showing Bitcoin's steady push and rising interest among institutional investors. Digital asset trading platform Bakkt and Fidelity Digital Assets, as we just heard over here, will serve as the custodians. Bloomberg LP will serve as the pricing agent. Big Four auditing firm Deloitte and Ernst & Young will provide tax and auditing services for both funds. This list of names right here, remember when I mentioned before that I'm fairly certain that what we're going to end up seeing happening is that a lot of the, not smaller players, but the not big name players within the cryptocurrency space are going to start to be pushed out, and everything that we've seen pretty much ruling over finance before will be the forerunners within the cryptocurrency space. This is now becoming true. Bakkt is basically New York Stock Exchange. Fidelity is Fidelity. Bloomberg, Deloitte, Ernst & Young. These are going to be the people. They pretty much control regular finance, and they're going to control the cryptocurrency space. It's just kind of how things are, at least maybe, I want to say maybe even just more so within the United States area. But the big names are going to make sure, and this is why and always keep this in mind as well. If you think that crypto is small, if you think that crypto is not going anywhere, if you think that crypto just doesn't have a bright future, there's a reason why the largest firms and brands in the entire world are also getting into cryptocurrencies. Like, it's not going to be like a passing fad. It's not going to be this thing where people are like, oh, maybe it'll die out within a year. Like, it takes a lot of money, a lot of preparation, a lot of work, and a lot of paperwork and regulation to be able to get to this point where we can have names like Deloitte, Ernst & Young, New York Stock Exchange, and Fidelity, and Bloomberg being the pricing agent for a fund of Bitcoin. Just thought I'd throw that out there. According to a press release, the funds are passively managed investments that provide exposure to the leading cryptocurrency at a low cost, air quotes. A $25,000 minimum investment is needed for the Galaxy Bitcoin Fund. $25,000 minimum at a low cost, which has quarterly liquidity. The Galaxy Institutional Bitcoin Fund has weekly liquidity and requires a greater minimum investment. There's no number for that. I'm going to assume it's probably at least $500,000. I think, not Facebook, Coinbase was trying to add some type of a thing that they wanted to do for institutional investors last year, and I think the minimum buy-in, I believe, was $500,000. Good luck. Steve Quartz, head of asset management at Galaxy Digital, said, and I do quote, "The Galaxy Bitcoin Fund helps accredited investors mitigate the complexities and risks of managing direct Bitcoin investments. The funds provide investors Bitcoin exposure with best-in-class service providers and Galaxy platform support." There was something about the money they were trying to raise. Is it even around here? Blah, 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 so. Anyway, I assume this will also do very well. Galaxy has been one of the largest Bitcoin fund holder people. I think this is headed by, I'm pretty sure I said it. It's headed by Mike Novogratz. He's one of the people who isn't in the news as much anymore, and I think he's finally learning that he has to keep not a low profile. I think he owns several 100,000 Ethereum, and he also made sure to mention before that he also was one of the lucky few people who got into Bitcoin when it was worth almost nothing. So I see me taking a step back. And the other little slight news that they also have right here is that Bakkt has finally reached another milestone. $100 million in volume for their Bitcoin futures market. Cool. Kind of awesome. It was bound to happen eventually. I'm actually surprised that from the get-go it wasn't like this. I don't know exactly what took so long. It's the New York Stock Exchange. Like they're the actual largest name in the world of stock finance, blah, blah, blah. Like everyone has heard of the New York Stock Exchange. You may have never heard of the German Stock Exchange or the Swiss one, or maybe even the one in Bermuda, but everyone knows the NYSE. So I assume, I give it by next summer, they'll probably have $500 million per month in volume. Just seems completely logical. And yeah, another Bitcoin fund is opening. I don't know if anyone has 25,000 to be able to throw into this fund. The point kind of being every week, and it's not even like it's something that happens once or twice and we're kind of go, okay, well that happened, 9 months ago. About every week, we're getting information about another fund, another investment this, another so-and-so and so that's investing physically in Bitcoin, buying up Bitcoin on the behalf of their shareholders, stakers, money people, yada, yada, yada. We always get the news of what's happening, typically what's happening within the States, or even more so just within New York, keeping in mind that there are other states, so this is probably happening at least in Miami, LA, maybe some parts of Texas. It's probably also happening in London, in Paris, in Switzerland, all these other places. It's I want to say it's good for adoption, but it's good for prices. When we start getting, especially as regulations run rampant, and we have to know exactly how many coins all these people have, I think we're going to be shocked by next year about how much Bitcoin is actually not circulating anymore. That's simply in some type of a major fund. And next up, UK-based, I don't think we spoke about this. I think some of the words look familiar, but I don't think we actually touched on this. UK-based Kasha, which describes itself as a banking service platform, is about to launch bank accounts for stateside crypto firms denominated in US dollars. The new accounts will be open for applications on the 25th of November, with Kasha saying they offer full banking features with access to all nations globally, barring sanctioned jurisdictions. Those who other countries have pretty much said you can't do business with them. Archit Agarwal, Kasha's chief product officer, further said the accounts will be domiciled in the US and have full access to automated clearinghouses and Swift networks. Crypto and other high-risk firms will need to fork out an account setup. Oh, I'm not able to read all that. Pre-compliance team, compliance. Crypto industry companies in the US as well as other jurisdictions have traditionally struggled to find banks that will serve them. Even if they do, accounts may be closed without notice or warning over the perceived risk of cryptocurrencies. As such, there are relatively few crypto-friendly banks allowing firms to conduct daily business, normal business as other traditional would expect as standard. We've seen a problem over the last 3 years within the cryptocurrency space when many different cryptocurrency companies have tried to get a bank or someone to hold their money, to hold their funds, and they either are barred from doing so, they're told completely, we don't work with people who deal with cryptocurrencies, which is completely insane. Imagine you trying to sell mangoes and a bank is like, yeah, we don't talk to people who sell mangoes. Like, when you put it that way, like, it sounds completely insane, right? Like, what? Why not deal with a company who's trying to give you their money? It's nonsensical. The other part that we've seen is bank accounts have been opened. Companies have worked with banks or given their banks their money at the end of the month, and so and so and so. And a number of companies have had a couple million in the bank, and then their accounts were frozen. And then the company couldn't do anything for a couple of months, and it was all this. It's just complete nonsense. So anytime that we get a crypto-friendly bank, is always a thumbs up for us, especially one that is denominated or can be used by U.S. companies, because there's still this really weird thing. Who was that guy a couple of days ago on Twitter? I don't know who his name. He's the head of like some major company, major firm, something. He's worth, I think, hundreds of millions of dollars. And I think his bank account got frozen. And it's really funny. And I mean, it's not funny, but he went onto Twitter to complain about the banking system and stuff like that. He has nothing to do with Bitcoin. He has nothing to do with cryptocurrencies, but he's very, very rich. And I think he works in like the money field area somewhere. And people were pretty much telling him on Twitter, they were like, now you see how it feels for everyday normal people. Like, it's one thing if you're worth 100 million, getting your bank account frozen, you can probably sell a diamond or a bar of gold. You'll be good for a week. But imagine not having money and then your bank account gets frozen because you're trying to buy 1/100th of a Bitcoin. It sucks. So reality hit him pretty hard. Anyway, this is not advertising for the bank, Kasha Bank, whatever it's called. It's more like a thank goodness that we're going to have other options. The same exact thing with the people from Litecoin. I thought they were also opening up their own bank, or we never really hear about these things that much anymore. Maybe they fell through. Who knows exactly what's going on? The point being, there are other options now, and this is very good for companies who keep getting shunned. And the worst part of all of it always is these same banks who shut down accounts are also going to be getting into cryptocurrencies as well if they haven't already been doing so secretly. And they're going to be offering cryptocurrency accounts and custodying and all this other bull crap, excuse my language, within the next 3 or 4 years. And then it'll be as if they never were shutting down people's accounts. It's all, they're garbage. Anyway, let's move on. Here's a very weird one. I have no idea how to take this. The United States Security and Exchange Commission, or the SEC, is reviewing its decision to reject the Bitcoin Exchange Traded Fund, or ETF, from Bitwise Asset Manager and the New York Stock Exchange ARCA. And in an announcement on the 18th of November, the commission said that the ETF filing for Bitwise Asset Management and New York Stock Exchange ARCA will return to review following the earlier rejection for not meeting the necessary requirements in October. The U.S. regulators said that the applicants did not meet their necessary requirements regarding possible market manipulation and illicit activities. They said, and I do quote, "The commission is disapproving this proposed rule change because, as discussed below, New York Stock Exchange ARCA has not met its burden under the Exchange Act and the Commission's rules of practice to demonstrate that this proposal is consistent with the requirements of the Exchange Act Section 6B5, and in particular, the requirement that the rules of a national securities exchange be designed to prevent fraudulent and manipulative acts and practices." One of the regulator's major concerns when evaluating I can't speak today. I can never speak. When evaluating new commodity-based ETFs, is establishing whether the underlying market is resistant to manipulation. In the SEC order that rejected Bitwise's application, the commissioners wrote that evidence insufficiently supported the claim that the real spot market for Bitcoin, when fake and or non-economic data is removed, is sufficiently resistant to manipulation. So I'm going to try and give you the super quick rundown. The SEC says that they're not going to approve a Bitcoin ETF because of manipulation. Every market is manipulated. So saying that you're not going to approve a Bitcoin ETF because the market could potentially in some way be manipulated is once again BS. Because we know that every other market and every single plane of existence is also manipulated in some sort of way. The idea has been is that there isn't a trusted way to be able to get spot market prices for Bitcoin, pretty much meaning where the price is, where it was, so and so and so. This once again leads us directly into what we were talking about before a couple of minutes ago, as far as trusted people being within the cryptocurrency space. The Bloombergs, the Ernst & Youngs, the New York Stock Exchanges, the so and so and so, the Fidelities. These are going to be the places where maybe not we, but larger players in the game will get their prices from, where they'll get their information from, where they'll get their news from. It's all shaping up to be this way, and it's a shame that not that the crypto market has to suffer, but that they have to continue. I believe that they're not truth-telling by the things that they say. That's the only good way that I could put that into a non-insane rambling speech. The secondary part is that speculation is abound. Why would the SEC need to re-review something that they just rejected a couple of weeks ago? I'm going to assume, one, this is going to be re-rejected. I don't assume this is going to go through. I don't want to say publicity stunt, but it's happening for some sort of reason that I just can't put my finger on why the SEC would find the need to re-review something that they just, like, did the New York Stock Exchange just get it right? Like, did the other 5 years of the other 25 companies who've also filed for ETFs, who've also reapplied for them, did they all simply get something wrong that the New York Stock Exchange just figured out over the last 6 weeks? I doubt it. But the whatchamacallit, this is making the rounds in the news world because people are wondering if this will lead to something. I doubt it. There was an analyst on TV, the internet, he was somewhere, and he said that he doesn't think that a Bitcoin ETF is going to be approved until not only has Bitcoin passed by the $1 trillion market cap, but he sees even a $2 trillion market cap. He thinks that Bitcoin needs to be extremely robust before an ETF gets passed. And even more so, if you want to look at it this way, a lot of people were saying last year and the year before, a number of analysts, the reason why an ETF hasn't gone through is simply because the SEC wants to show other people that they have some type of sway or control over the market. If they had let this go through, people would have assumed that they were pushovers. We can get our own ETF pushed through, and therefore they have to make it seem like it's really worthwhile. Like, you have to really struggle to be able to get this. But the market, the actual crypto market, doesn't really care. This is more for institutional investors, and it's more for the SEC to realize or figure out a way to remain relevant in a world where they're slowly becoming more irrelevant, especially as we get smart contracts that can execute the things that they should have already been doing. It doesn't take 5 years to do something. If something is wrong in the market, you tell people what's wrong, they fix it, you get it done. 5 years is just a stall tactic. And I think the stalling is just so that other people, Fidelity, Bloomberg, yada, 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 can get into the market, establish things, and then they can say, oh, now everything is trusted because the same exact people who manipulated the other markets, now they're in this market, so everything is cool. That's just what it looks like. Here's the actual thing on the federalregister.gov. It says self-regulatory organizations, New York Stock Exchange, ARCA, orders schedule filing of statements on review for an order of the disapproval of the proposed rule change to list and trade the shares of Bitwise Bitcoin ETF Trust. Sure, why not? It's not going to pass, but wonderful. Next up, the official Monero website has been hacked, and versions of its downloadable command line interface, or CLI software, have been infected with Monero stealing malware. I'll get to why that's very ironic in a second, besides it being Monero itself. A security warning was sent out on Twitter, alerting users that CLI binaries available on blah, 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 blah may have been compromised at some point during the last 24 hours. Investigations ongoing. Shortly thereafter, Monero's core developer team confirmed the incident on Reddit, admitting that the infected files had been served from the website for roughly 35 minutes before they switched to a secure fallback source for server downloading, cautioning users to always check the integrity I've downloaded files. They pretty much said what I just said up there. 24 hours, don't do this, wait for it, don't download it. Money, money, money. Monero in 2018 was a very popular, it's not funny. Monero in 2018 was a very popular coin for, I think, like ransomware attacks and also people sitting in Starbucks using the free Wi-Fi. If you are right now, get off of it. Using the free Wi-Fi that were getting stuff installed onto their computers that were also mining Monero. I don't know how it started, where it took place from, why Monero itself became so popular, but it was happening for government agencies within Starbucks. Like public Wi-Fi was also affected for some reason. People were linking up to public Wi-Fi accounts, getting stuff installed on their phones, their computers, their tablets, so and so and so. And it was mining Monero for the people who had not hacked their system, but installed the malware on it. That's why I said it's funny that the infected malware to mine cryptocurrency or steal cryptocurrencies was Monero on Monero's official website. It's just kind of weird. Maybe it's just me. So if you were wondering or you realized that something was wrong, or maybe you downloaded the Monero software yesterday, delete it and go get the real one. Anyway, let's move on. To kind of finish things off, I'm sure you've seen it. I've seen it. They're everywhere. The idea is now, for those of you not looking at the screen, it says Bitcoin's price is primed for a breakdown below $8,000. I'm expecting it. I would be more shocked if it doesn't happen. It's clear that there are forces who are trying to push the price of Bitcoin lower. I think a lot of the news that we've been getting is garbage. I was listening to a podcast. My gosh. It was these two guys. I can't remember the name of the podcast. It was some podcast I was listening to. And they were discussing the exact same thing I said a couple of days before. They said, it's really weird the time frame that we saw all these things, people talking about that they wanted to, or rather that the price of Bitcoin was going to go down, but like every single person on Twitter was talking about it at the exact same time, so and so and so. And then the whole correlation between the Bitcoin hard fork things, what have you. I assume Bitcoin's definitely going to fall down below 8,000. I'm assuming we're going to hit a good... This one says Bitcoin capitulation nears. Price to plunge to 6,400 if history rhymes, or if history is manipulated. I assume we're going to hit 7,000 something. Probably see a boost back up as people start buying back in. I would not be shocked if we hit 6,000 something. It seems far too obvious at this point to me. I mean, this is just how, once again, this is how I see the market. This is how I read technical analysis. I read what the analysts are saying. I make sure to absorb all this data as well. And it's just my third time I'm using this. My BS meter goes off very rapidly when I keep seeing people change what they're saying on a daily basis. Oh yeah, we're definitely headed for a bull run. Oh no, the price is definitely going down. Wait. Now it says it's going to go up, and it's like, okay, you keep changing it every single day. The point being, if you make things negative enough, people will react to it, and I assume people will start selling or have already started selling. I saw some comments a couple days ago on an older video that someone had posted that just had been posted, and they were like, yeah, I sold, a couple weeks ago, can't take it anymore. It's a difficult market. It's not easy. I told people that as well when we had the rush up to 14,000 a couple of months ago. I was like, it's going to go back down, and then it'll go back up, and then it'll go back down again, maybe even more than it went down before. And it's going to be rough. It's going to be difficult. So crypto's not for everyone, but neither is making money. Just it's really not everyone is built to make a real estate empire the same exact way that they're not made to deal with Bitcoin fluctuations back and forth. Don't let it get you down. It's just part of it. One of my close friends, if you are listening, I think this is his first run up and run down, and he's not he's not doing too bad, but he's not doing too hot when it comes to Bitcoin looking like it's about to go below $8,000. But yeah. As always, a very special thank you to my Patreon supporters. Professor Wally from Gunbot University, Todd Mullis, Adam Graysick, Mohan Maroni, Master Ventures in Thailand, Brady Niels, Woody and Daisy, Triple M and J, Jared Snyder, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Adobo, Mill Wheezy, Mechanic, Strange Radio Central, Crypto Artist, Coldy 3D, Cryptopolis, Nicholas, One Peace, One Love, Damien, Setsuna, Nick Kanaya, Richie Richard III, Vlad the Impaler, Crypto Beer, Shipmate, Paxis, Nick Mangela, Vodi, Anthony Charles, Jim Garner, Jeremy Fox, Minting Coins. Oof. Miller hits chest every day and Kyle skips leg day. Yes to Crypto, Bodie McBoatface, Semi Buucha, Ting Tang Walla Walla Bing Bang, Anytime Fitness, Monk's Corner Staff, and Shoop Shoop Diddy Wop, Hummer Hummer Wang Dang. Thank you all very, very much for your support. The top 9 coins, kind of lumens as well, are down. XRP's up by 1.59%. I assume this is an anomaly. We all know that XRP never goes up. We could have news that all of England is adopting XRP after Brexit, and the price would still go down by like 18%. It just doesn't make any sense. Maybe there was some really good news. Maybe Bitcoin is trying to slowly push its way back up, and XRP is getting the push forward first. However, everything is trending relatively sideways. Nothing is really up or down significantly, majorly. So expect by the end of this week for Bitcoin to have fallen below 8,000. I want to say even by sometime today. We'll see. Either way, I think it's going down. I mean, unless it surprises me. The point being, don't get your hopes up and just assume that is going to go back down. I hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching and or listening, and I will most certainly be talking to you all soon. See